I'm going to ask a really dumb question. We just talked about how FAFSA delays have made it so that students don't know how to commit to schools or don't know the cost of things. And in some cases, the schools themselves who rely on a lot of federal aid are also just as nervous and concerned. When we talk about schools that need to fund financial aid for students, does the money raised through something like one of these bond sales go towards subsidizing student tuition?
Well, there's two different issues coming this week. So one this week, one next week.
Okay.
And the one this week in the taxable municipal bond market is for general purposes, so they can use that for a wide range of purposes. They don't really have to define it.
Oh, I see.
That's how they get in the taxable market. The tax-exempt market, that's more for refinancing some outstanding bonds that they wanted to refinance in this environment. So it's not specifically for that this week, but this week's is more general and can be used a lot of different ways.
It can be used, so there's a possibility that it might. I mentioned how Cornell is the latest elite schools to take advantage of what's been fairly stable interest rates. When you look at the options for your muni investors, do they specifically target education bonds? So
it's funny, education bonds, when you look at the municipal bond market, most people out there think of us as a market for state and local governments, general obligation bonds. But in reality, that's under 30% of the market. Most of it is revenue bonds. So you have universities as a big sector of our market and has been for a long time. So they are a great opportunity in our market. They're high quality bonds in a lot of cases, a lot of liquidity in the market. And investors are looking for diversification. That's a good way to diversify.
Yeah, we just showed a chart, Shonali, that showed that earlier this year, Princeton sold about $1.5 billion of debt, and Harvard sold $750 million of taxable bonds.
Insatiable demand for Harvard in particular. I'm curious as to what the draw is here. Is it the tax-exempt status? Is it the yields?
A lot of it is obviously for the university, it's the tax-exempt ability to issue tax-exempt next week, and then the ability to get good rates in the taxable market this week. For investors, the opportunity is tax-exempt income and a very high-quality credit, and that's typical across Ivy League schools.
Now, why, in addition to interest rates, are schools now tapping the bond market? Is it also that you see donor revolts going on here? Are they looking for new sources of income or money to hold them through?
Well, a lot of it is the universities. They've been going through a few years where they had a lot of money from the school. Everything's been going really well. Demand's good, economy's good, and they had a lot of stimulus money, so they didn't really have to borrow the last few years. Now it's come to the point where rates have come down a little. There's a lot of investor demand because the rates are attractive, so it's an opportunity for issuers to get decent rates and for investors to get interesting bonds to buy.
So in the story that we wrote about this, it was noted that these kinds of issuances don't come very often. I believe that's what you told our reporter. The fact that there is this issuance from Cornell, 2 parts, and from Harvard, we've seen. Is there a little bit of FOMO going on? If you see the other schools selling bonds, you kind of have to get into it because why not? Let's raise some cash.
I'm not sure if it's FOMO. I think it's kind of like they're all viewed as an opportunity is very strong right now. The demand is there, and maybe one of them comes there and gets really strong demand. The next one realizes, but they plan these pretty far in advance. So I think it's just it's more the environment. Is they need to borrow, they want to borrow for projects, and the market is very good for borrowing right now.